Good morning, good morning, good morning. What's up, everybody? It's Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we are about to get rolling on our hump day edition of our daily market session. What we're going to do is what we do each and every day, identifying breakouts and reversals from an educational perspective. Hope you guys are all having a phenomenal day. Do me a favor, leave me a chat. Make sure that you can hear my voice and see my screen. For some reason, it's not showing that my sound is recording, but I want to make sure that you can hear me. So I'm going to go ahead and shrink my head here a little bit. All right, let's go ahead and get rolling. Let me type in the chat window, make sure everybody can hear me. We're going to talk about our markets this morning. But for some reason, it doesn't look like my microphone is working. Oh, okay, all good. All right, just making sure because I couldn't see on my machine. But glad you can. All right, so let's dive in here looking at the ES. So on the ES this morning, we're down. I mean, we fell hard here just in the last few hours, and so there was some sort of news or catalyst or some sort of a trigger that dropped this down pretty hard here in the last few hours. And whenever we see something like that, we know that it sets us up for a potential reversal on the rally back up. What I want to do, though, is look to the 15-minute and see, is there going to be a better area to re-enter this thing? And for me, I would take a look at this area right here as a better potential area for re-entry. Now, why am I taking a look at this area? Well, the reason I've got this area highlighted is because of the wick over here to the left. So this long wick means we came all the way down and then we rallied back up, and then this was our opening of the next candle. And then my feeling is that that candle probably went straight up and then dropped straight down. And so this is a little bit of a rally-based drop. Now I probably can't see that on the 15, and I hate to switch to the 5. I don't like to go down to 5-minute charts, but I want to be able to see if I can see that pivot on a 5-minute chart. And look at that on a 5-minute, right? We've got the rally base up, basing, and then the drop away. So it's clearer to see on a 5-minute. Now, to me, it's it's not a 5-minute level, although it looks like it basically could cover the pretenses of a 5-minute level. But that would be the level that I think is the 38. Higher, you may not get that order filled, right? You may not get that one filled because oftentimes price doesn't return after these strong, big moves down. So, now, in all of that, note that we're still in the context of a fairly sideways kind of slowing of a momentum uptrend. But this on a 4-hour chart is definitely what we would consider a speed candle, right? I mean, which was from, an opening morning range trade. And so we would look to see where price is going to go from this level if we're going to get a reversal back up into that range. I still think, we've talked about this for a number of days. We are seeing the upward trend is here, but it's slowing. Our momentum is definitely weakening in our overall upward trend. I mean, it's a strong daily chart, but our momentum, like I said, slowing down just a bit. All right, moving to the NASDAQ. So looking at the NASDAQ, hey, Larry and beautiful Yorba Linda. I haven't been to Yorba Linda in a long time. I got to go visit. So yesterday we talked about a potential breakout in the NQ if we got above these highs, and we did poke above the high, right? Yeah, a little long overdue. I'd agree with that, John. It's not like I've been the world's strongest bull the last few days, right? I mean, I've been kind of hopefully patiently waiting for a bit of a pullback. Once again, still thinking that my better opportunity is going to be getting long on an area of demand a bit below me. We just have to fall a little bit longer in order to get there, because you are correct. It is long overdue. I will say, though, that you should be able, with this movement we've had this morning, for those of you that trade the hourly SPX options, the daily SPX options, utilizing the move we've had down this morning, you may get a pretty good amount of credit and allow you to do that same trade a bit later into our market day if you're doing the iron condor around the SPX and you're using the daily chart on options. So because we're going to open up a bit lower, we're going to open up probably somewhere down in here. So that would mean maybe that you've got a better range bound position If you're doing the one day trade, you might even be able to lower it a bit and still get some pretty decent credit. We won't know that until the market opens and exactly what it's going to pay. So, but just something worth considering. I like movements like this sometimes early in the morning, because if we do get a rally back up, it's actually going to stabilize pricing a bit and allow for a good entry. All right, now the Russell. The Russell has sold off, and it's come back to our area of demand, which was a confirmation level. Now, why was this a confirmation level? It's a confirmation level because we've already hit it once. We moved away. We've come back into it. Now, we've come into it a second time. And if you notice, when we look at this, we've traded into it, and we got a little poke above. I will say I didn't set the trade up ahead of time. And so I was not looking at it yet. And so if you're not in that position, I wouldn't get in it until we get up above 2097. If you are in that position because maybe you got in a little bit early on that move, on one of those 15-minute moves away where it came in and just poked right back out, and you got to really go to a smaller time frame chart to see it. Like if you got in, this activates your trade because it's confirmation, and then this enters the trade. It's effectively, it's still basically going nowhere. Your trade is still valid, right? And we still may see a bounce. And if we do see a bounce, though, I think the best case scenario is that it bounces way up to here for a reversal back down, right? That's really going to be the best trade, is that reversal back down into that region. If you took the long, your stop is below the pivot down where we just had that red line. Let me put that back in so you have it, 2079. As far as a long goes, I don't have another clean long for a little while on this, and so a reversal would be ideal. On a 15-minute, kind of like what we have in the S&P, or excuse me, in the S&P, we do have this pivot area right here, but it's a bit of a retest of this wick over wick, and so I'm not as big of a fan of the 15-minute level on the Russell as I am on the S&P. It's just not as clean. Okay, let me put this back to the 1 hour chart. 1 hour chat so I can share this grid so everyone can see the lines effectively. Oops. All right, and then the Dow Jones is still. So Jasmine says, so we all going to buy, not sell. Well, Jasmine, in the Russell, I think that in the Russell position, you've got that long that we may bounce off of. If you're not in it, I wouldn't get in it till we get up above 2097. If you want to get long above 2097, I think you're probably okay to do that. That was the confirmation long. But the short is actually, I think, the better trade today, up here at 2132 by 2139, or in the S&P, 3810 by 3816. So you can take the long coming out of that confirmation level that we just erased in the Russell, but your better trade, I think, is the short there up above. Looking at the Dow, very similar picture in the Dow that we get to our other markets. As I zoom in on this one, once again, this is the pivot area that we talked about in the S&P, but if you notice, this red candle retested it, right? So this red candle right here has already come back in and retested it. And so in the Dow, I'm going to go a bit higher with this level and bring it right here, knowing that my stop would have to go above this candle's wick at the tightest. All right, so a number of different supply levels up above us. Now, once again, when I have all of the levels at the same basic price heading back up, that means that if the market rockets straight up, if you take all four of those trades, you get all four stop outs, right? So you've got to pick the one that makes the most sense for your trading style. I'm not saying to take them all. I kind of like the ES, the first little ES level, as really the one that to me is probably the cleanest on here, because it's a very small zone, and it's the one that I think has the best chance of actually getting retraced. On the 1 hour time frame, we are, Jasmine, and we might be, but I don't use the 1 hour time frame ever to identify trend, right? For trend identification, I want to use a bigger time period. So I use the 4 hour to determine trend, not the 1 hour. All right, so moving over to our commodities positions. So looking first at crude oil. I hate to sound like a broken record. But when I look at this, what does this look like? It looks like the same thing I've talked about all week. There's not a lot of super clean areas of either demand or supply to take any really great trades. Yesterday we did bounce off this little area of demand, got a nice little run away. We might have a decent move down off of this supply if price comes back into there, but just understand that you take a bit more risk because our 4 hour is still very sideways. So I think that the trade on here is still being patient or trading the iron condor and allowing price to pop between zones. Looking at gold, we did have our gold contract rollover. And on the gold contract rollover on our bigger picture daily chart, we can see that gold's kind of hovering sideways a bit. And this is not overly surprising. I mean, after you saw this parabolic move up, we saw a move down, and now it's just kind of stagnating and going a bit sideways on a much larger scale. For intraday trading and trading opportunities, we're still very sideways, although putting in a decent potential reversal at the moment off of these candlesticks, right? These candlesticks here give you a good potential reversal to head back higher. I think that moving to a 15-minute, you've got a couple of little levels in here, but we're basing in front of those levels. Even when I go to the 1 hour, I could theoretically talk about utilizing this, but the problem is if we use this, our stop has to be, excuse me, at the tightest, our stop would be up here at 1851.5. So that's our stop at the absolute tightest. So even looking at the 1 hour chart, my risk is this, right? From entry to here, because it's a quality level. Well, but then my reward would have to be where we would move up from. Well, where we would move up from is basically where price is right now, which is essentially a 1-to-1 reward to risk, because you got to get out before the opposing area of demand. And so while I think that that's a pretty good area of supply from a structural standpoint, it does not offer a high quality reward to risk scenario. So know that if you take it, and once again, I've got my particular set rules that I want to follow when it comes to, you know, what I talk about and what I teach, and frankly, you know, what I'm willing to risk money on. But that's up to you and your personal risk tolerances as to what am I willing to take. Now, that's the downside of this, is that reward to risk. The good side is that you do have a lower low here. Price rallied back up, but we were unable to get a higher high. And so there is this semblance of, okay, I think we are showing some weakness. This could get me in at the beginning of a downtrend. And if we have a new impulsive move that breaks through this opposing area of demand, I think it's very realistic to see price make it to 1829. And so then your reward to risk gets very appealing. Does that make sense to everybody? So one of the ways you could handle it is take the short up here. If we make it down to right there, just move your stop to break even and then allow price to continue to run, or just take a little off the table. All right. Next, let's go to not a whole lot to talk about in nat gas or copper. So let me share this one. Looking at our agricultural section, we had a level in soy yesterday, and in soybeans, price came up to the level, and then we came into our supply 1, 2, 3, 4, 5. On the 6th candle was right when the market closed. And then when we reopened, we opened up above there. So ideally, you probably got out of this thing as the market closed if you took the short, knowing that we were basically going absolutely nowhere. There was no stop out. Now, if you stayed in it, you got stopped out right at the first candle of the very next session when it opened up. That being said, I'm going to leave this level intact for a moment because if you notice, let me flip it from green to yellow because yellow is where I talk about a flip level. If you notice that area of supply, which got 6 candled through, then acted as an area of demand and price rallied right through again off of that zone. So it might work a second time. I'm not willing to bet on it, frankly, in the fact that it would work a second time because of the fact that we based inside of here and we touched it once and we didn't get a super strong move away. I will come a bit lower into this area right here, 1351 by 1358 for an area of potential reversal. 4-hour trend has got us a clear lower or higher swing low, right? Clear higher swing low, and by getting above here, we've got a clear higher swing high. So uptrend is the way to go. Supply levels above us become confirmations. Corn. Corn was basing here right around the level. We actually did just get a recent break out of that. If you didn't take that, you certainly still have an opportunity to do so, especially as it's pulling back and retesting the area. If you'd like to be a bit more aggressive or more conservative, wait for the pullback all the way into here and then take the long off of that zone. Looking at wheat. So in wheat, we had a breakout position here, which gave us a pretty nice run yesterday. And we talked about this as a potential area where we could see price bust through, and that's exactly what it did, above the 651. So if you took that trade, cha-ching, you're doing all right with that. I'm all right. Nobody worry about me. Name that song. All right. Anyway, looking back, I think that I would look right in here as our probably next best reversal period for price to come back down. And then bean oil. Soybean oil also popped above the area that we talked about as a breakout, gave it the retest, and has really run up since that retest area. I mean, it's just oftentimes those breakout points will become retest lines of support where we see price move, and that's a great example of that occurring. So when it comes to demand, below me, the next one that I would come to would be this area right in here. A little bit more in the ags today than there is in some of our other commodity markets. All right, moving over to currencies. So we talked about the ZN and getting a breakout on the 10-year note. And our 10-year note breakout originally here came up and hit another potential breakout point. We haven't really gotten the clean 3 touches, and we got 1, 2, and no basing before the third. So it's not the cleanest of entry. If you took it, you're okay. Your stop just has to be below this pivot. Or if you didn't take it and you're still interested, look at this area right here and see if we get a reversal right off of that zone. In the 30-year ZB, same kind of picture. We had the resistance point up there, which we didn't come back in and retest. So what I'm going to do, it just gave us 1 touch and then broke through. I'm going to wrap my new lines around this unbalanced wick over wick right here for a potential reversal. Next, looking at the euro. So our euro level yesterday, we talked about this area as a confirmation short. That entry worked out extremely well with a very nice strong move away. And then we came back into this area down here, which we said would have been a pretty nice target. So that came all the way down, hit its target, and now we're hovering above what could be a potential breakdown area, especially with the basing that we've got in this zone. So let's see if we break down from here. If we don't break down from there, look for a rally up into supply. This probably being the one that I would go with from a supply zone standpoint. Okay. And then last on this one is the Canadian dollar. Canadian dollar is coming down. Once again, yesterday we talked about the fact that I wasn't going to put any new levels on here. And you can see why. Because yesterday, had we looked at this area of demand, the market blew right through that area of demand. You look at this area of supply, the market blew right through that area of supply. And right now, we're breaking through a lot of fairly clean areas because we're very range bound. And we're very range bound partially because it's tied to crude oil, which is also very range bound. So I'm just going to hold off for a few days on Canadian dollar. There's no reason for me to force that trade. All right, last page. Let me pull up the last page. You guys are awful quiet this morning. Seems like a fairly small class. It's fairly quiet this morning. Not getting my normal typing going on in the chat window. So, all right, bonds and currencies numero dos. So looking here at New Zealand dollar. New Zealand dollar, we had talked about a potential breakout above here. Absolutely no basing existed there. We poked above it, and then we just kind of hovered. And so if you wind up taking the breakout anyway, you had plenty of reason to say, hey, this isn't working. I should probably get the heck out of Dodge. Level still, I think, valid for a breakout, but I'm going to remove it at this point. We've got this line of control, which we've hit, I don't know, 4 times. I've been talking about it basically every day for the last week or so. And so if that level comes back in and retests, I don't know that I would take a long off of it again in simply the fact that we've hit it so many times. I don't know that I would take a long off of it again. I'd actually wonder if we're going to base here, break down, reverse here, and then it becomes a potential short. That's actually what I've been waiting on. I'm trying to play chess if the market's playing checkers. I'm looking a few moves ahead. And so you might have a reversal right in here, and I think that actually is probably the better level. Yeah, that is true, John. They got to blame something. You can't just drop it. You can't just drop the market without having a reason, right? It can't be because there was just plain old profit taking, right? It can't be a profit taking move before the end of the month. God forbid, right? That just makes way too much sense. And I think we may see more of that as we head into the end of the month. Are we going to see a bit more profit taking? Because we talked about the fact that January historically is bullish, and then lately we've seen that February is not. And that'll be the next question is, does it fall from there? So Great British Pound yesterday, we got a breakout, but we got a meh follow through on that breakout, right? You didn't get basing in front of the level unless you took the breakout here. And then you got a little quick pullback, and 1, 2, 3, 4, 5, 6 candles later, you're right back to break even. Time to get the heck out of Dodge. And so where would I look at now for my next opportunity? Well, on the 4-hour, our upward trend slowing momentum is still bullish. We are still there on the 4-hour. And would we still be there on our 4-hour if we retrace all the way back to here? Now, notice we're bouncing a little bit at this wick over wick, right? So we've hit this wick over wick. We actually got a little move away from this wick over wick. We hit it once and moved away. And now we're chopping around in front of it. We may get another move, and it's a little bit smaller, and it's a prior area where we've seen some turns in the past. So I think that's actually a fairly clean little zone. Another one that's down here is also available, but it's, in order to get to this one, we got to get through this one. So if you're more conservative, you can take the upper level as a confirmation and the second one down here. Lee, I am not trading GameStop because I don't buy into hype. I think there's a lot of opportunities in other markets, but I mean, look at how this thing is done. If you're going to trade GameStop, all technicals are just out the window, right? Your technicals are all just essentially out the window, and so it doesn't really matter. I do have people that are in GameStop. I'm just not one of them because I don't want to deal with a lot of these things. The one that I've heard that is the next potential GameStop is AMC. I've heard that as the next potential GameStop. So absolutely, look at this. It's opening at $16 a share. So there you go. There's your potential GameStop right there. As it's got a super, super high short interest and short squeeze. So just kind of considering that as a potential. Now, do I know if it's going to go as high as GameStop? We'll see. Volatility is probably through the roof. On AMC, TAIV range. Yeah, I mean, look, our volatility is up at 253. So, Chin, what is a normal pullback percentage count as a healthy pullback? Well, any pullback, Chin, that does not, Jasmine, that does not break a prior swing would still be a healthy retracement, right? So it's really the percentage isn't as important as does it break a prior swing, and if it breaks a prior swing, then it's not a healthy retracement. It's a potential shift of a trend. But a pullback like this, for example, if price pulls back to here, that's still very healthy because we've not gotten below the last prior major swing, which was down here. So it's not a percentage amount. Now, you can utilize Fibonacci numbers, 23.6, 38.2, 50%, 61.8, 78.6, to see where they commonly stop. But we don't know that it's going to stop there, right? Japanese yen and the Australian dollar, I mean, I don't even need to really zoom into these to see, right? Very sideways, very sideways. Probably not a lot of good trading opportunities in either one of these markets because of the sideways nature of what we're doing on the 4-hour chart, right? I mean, that's just garbage, they say. On the Aussie, very similar picture, although the Aussie is showing a bit more weakness because we're not putting in new swing highs every time. So by not putting in new swing highs every time, the Aussie is showing a bit more weakness, potentially a reversal area up here if you wanted to give that a go. You might have a decent short area up there. I think that actually is, from a structure standpoint, a pretty good play. So, all right, everybody. Well, that's all I have for today. Let me share this grid out so everybody has it. But keep an eye on the markets today. I have... Oh, I love that, Sonia. I appreciate you coming in and joining us. I love doing the DMCs, and I like that people actually come and watch. So if you guys have any questions, as always, shoot me an email. Do me a favor before we leave. If you're in the room, hit that little thumbs up icon. It means a lot. I'd appreciate it. Keep an eye on AMC today. Keep an eye on AMC. Let's see if it does the GameStop thing. I'm not saying to trade it, by the way. Use your own judgment. Use your own judgment and your own risk tolerance. It's interesting, where our pre-market trading is driving this thing. So it would be interesting to take a look at and see what happens. So, all right, everybody. Hope you have a great day. I'll talk to you tomorrow, live trade room. So live trade room for the Traders Army members. So no DMC tomorrow, but I'll see you then. All right. Peace out. Oh, yeah, minus 90. All trend and no trousers. I love that, John. All right, everybody. I'll talk to you soon. See ya.